Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we got the market, right? Trying to push itself up to a new record high. I do think we're going to eventually do that. We're going to eventually get a new record high. Now, we've rallied off that low, right? Rallied up, rallied up, rallied up. Now, I do think we're going to get a little bit of a pullback, and then we're going to continue to rally up, rally up, rally up, and get that new record high. That's what I see, but I do see some volatility coming back into this marketplace. Now, the reason I knew we were going to rally off of that low, right, was because the VIX told me we're going to rally. The VIX shot up as we were coming down. I mean, we dropped over 20% on the NASDAQ and the VIX shot right up, right? But then the VIX started coming down and it dropped below the 20-day, and it hasn't been back above. It just followed that down, 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 down. And that's how I knew we were going to rally off of the low. That's how I knew that we were not going to have the big crash. The VIX was coming down. But now the VIX is low, right? And it's going to start to go back up. We're going to get some volatility in this marketplace. So we'll probably get a little bit of a pullback, maybe not a great big pullback, but a little bit of a pullback before we start to rally higher again. And we're going to rally and we're going to make that new high. And then everybody can get out of the market just in time for the big collapse, the big rug pull, right? That's just my take. Your take's probably completely different. And that's okay. Now today I want to talk a little bit about, when I was in college, back in my college days. Now I was an economics major, right? I thought that was cool stuff. I mean, it was the study of money, right? And I mean, economics is the discipline that describes and analyzes the processes and institutions by which our society limits its scarce resources to its satisfaction and competing ends. You see, I remembered that all from my economics classes, right? And I loved economics. I love money, right? So I studied banking, the banking system, right? And banking was this great business, fabulous business, right? People would come and put the money in the bank, and the bank would pay them 1 or 2%, and they'd loan it out at 8 or 10%, and they'd make the difference in the spread. Very profitable, very profitable. I could do the numbers in my head. This was a great business. Now, what happened? What happened to the banking industry? Why are the banks in trouble? A lot of people don't believe they're in trouble. I'm telling you, I think they're in big, big trouble here, right? Now, back in the day when I got my economics degree, I started to work in a bank. I wanted to be a banker, right? And I met this bank embezzler, and it was cool. I became his friend. I didn't know he's going to embezzle a lot of money from our bank, and they thought I was involved with it. The FBI, they came in, they interviewed me. They realized I was clueless. I was just starting out in the business. But he embezzled a lot of money from our bank, and I met him, met a lot of movie stars. I was working in technically it wasn't a bank. It was called Brentwood Savings and Loan. It was a savings and loan down in Brentwood, which was right next to Beverly Hills, right in the wealthiest part where all the movie stars were. And they'd come in and do their banking just like a normal person. Very fascinating as a young kid working in the bank, right? I got to meet a lot of them, and that was really cool. But my point is, the banking industry, it's kind of changed now. It's kind of changed. No longer is it just people coming in, putting their money in, and you make the loans. They go buy a house, you give them a mortgage, and you make the difference on the spread. That's not where the money's made in the banking industry. The money's made by taking your money, which now becomes the bank money. By the way, once you give your money to the bank, it is their money. You do not own that money. You do not have a right to that money. It is the bank's money, and they'll decide if they're going to give it back to you. That you can watch The Great Taking. It's very interesting, right? But they're supposed to take that and make loans. Banks don't really make loans anymore. I mean, that's a small percentage of their business. What they do is they take that money and they go to the casino and they gamble. They gamble in the casino with it, right? Okay, so they invest it, and now a lot of the trading desks, they make money, they lose money. Now, it used to be that they were separate, right? Like you had the trading, which was the brokerage end, and you had the banking system, which was the, depositing money and lending money. But now they put it all one big pile, right? Because it's much easier to do it that way, right? For them, not for you. You're not going to get your money back, because here's what happened. They took your money, went to the casino. They lost about 40% of it, 40% of it. And how do we know this? We know this from Silicon Valley Bank. But my Mike, that was 2 years ago. We haven't had any problems. Oh, there's a lot of problems. They're just not telling you about it. FDIC has a list of the banks that are going to fail this year, and they won't tell you if your bank's on it, because what would you do? You'd go get your money. They'd be a bank run. But they know which banks are already 100% going to fail, right? And they know some that are marginal, and some they hope make it. They hope and pray they make it. They don't have the money, right? They have less than 1% of the money, less than 1% of your deposits. So that's probably what you'll get back when this whole thing crashes, because they won't be a bailout from like the government bailout. Maybe they'll print the money. That'll take them some time. This time it's going to be a bail-in. They're going to take your money. Happened in Oklahoma already. Already happened here in the United States. Happened in a lot of other countries around the world. But in the United States, we don't think that can happen. It's going to happen. It's going to be really sad. It's going to be a bail-in, right? Now there's a problem. You see, they lost 40% of your money. 40%. Okay. So your money's gone. If there's a bank run, they don't really have it, right? So they're gambling. They're trying to make it back, but they have problems. So they lost 40% in the bond market. Well, how's the commercial real estate market doing? Not too good. Not too good. Commercial real estate in a lot of trouble. A lot of these big properties are now handing it back to the bank. In New York, there was a shopping center, lost $200 billion, gave it back to the bank, right? The bank took a hit. Hopefully that wasn't my bank, but it could have been. They don't tell you for sure exactly which banks. You have to look them up and do your research. All right, so they're losing money in the bonds. They're losing money in the commercial real estate. They're losing money on car loans. Okay, they go make a loan. People are not paying their car loans back. Car loan delinquency is really high. About, I don't know, between 5,000 and 10,000 cars are repoed every day because of people not paying them back, right? Credit cards, how are they doing? Highest delinquency rate ever. We're not paying the banks back, right? Mortgage defaults. So, man, FHA loans over 12%. But don't worry, those are backed by the government, just like student loans. But nobody's making the payments. The banks are not taking in the money. They don't have the cash flow. They don't have your money. So they're in a world of hurt. So be very, very, very careful here. But okay, so we got the solution, though. The younger people, they got the solution. Don't worry, us old geezers, us boomers, we the ones that messed it all up, and they're going to come in and they're going to solve all this problem for us. And I think that's just fabulous, right? So, okay, so now they're going to have what's called, well, we'll just call it what I call Bitcoin banking. Bitcoin banking, right? Bitcoin banking. Okay, so all these companies are starting now. They want to be Bitcoin banks. Okay, now there's some regulations in the U.S., so a lot of them are offshore. But here's how it basically works. See, you're in Bitcoin, right? Let's say you bought your Bitcoin for $1,000, right? All right, let's say you got $5,000, and now it's 100,000 of Bitcoin. You've made $500,000. Great. Okay, you go to sell one of those Bitcoin. Now, what happens? Well, the government takes their share, right? I mean, that's capital gains. They take their share. So you don't want to sell those Bitcoin. What you do, you go get a loan on your Bitcoin, okay? Now, you go get a loan. Now, this is funny to me. This is funny. So these Bitcoin banks that are giving out these loans, they require you to give them, let's just use rough numbers, 100,000 of Bitcoin. Let's say you want to get a loan for $100,000. Well, you got to give them 2 of your Bitcoin. Okay, so basically $200,000. They'll give you a 50% loan to value ratio. Now, you actually transfer your Bitcoin to them, just like when you put your money in the bank. The bank now owns the money. Just like when you give your Bitcoin to the Bitcoin bank, they now own your Bitcoin. You no longer own your Bitcoin, right? But they're going to give you half of the money for your Bitcoin. So they're going to give you half the money. So they got 200,000 of your Bitcoin. They're going to give you $100,000, right? Now on that $100,000, because you are a collateralized loan, if you weren't collateralized, you'd have to get credit card rates up here 20%, but they're going to do you a favor. They're going to give you the loan for only 13% interest, 13%. Okay, so you give them 2 Bitcoin, you get 100 grand, right? So now you're 50% of the value that you gave them, they'll give you back, and then you pay them 13% on that 50% value that you got, right? Okay, well, that sounds pretty good. Now, are there really people this stupid to do it? Apparently they are. They claim that they got $500 million in funding, and they're getting the people to give them their Bitcoin. Now, you see, when Michael Saylor sells a Bitcoin, we talked about that, buy some MicroStrategy stock, you'll be paying $200,000. So if you do it this way, anyways, they're really smart, right? MicroStrategy, you buy it, it's $200,000. Now they're buying it for $50,000 from you, because they're giving them 2 Bitcoin. They're giving you $100,000. So they're buying at 50,000 of Bitcoin. They now have your Bitcoin. They own your Bitcoin. The price of the Bitcoin goes down. They're going to sell off the number of Satoshis to cover them so that they don't get in trouble, right? Because they know Bitcoin is going to drop by more than 50%. That's why they only give you 50% loan to value. Now, why they charge you 13%, I'm not really sure. I mean, it's backed by Tether. It's backed by, I think it's SoFi Bank. Or one of those big banks is backed by. But anyways, backed by Tether. I think Michael Saylor's in. I think he's got his own company that does this also. This company I was listening to, I think it's called Strike. Just in case any of you Bitcoiners want to give them 2 Bitcoin, they'll give you 100,000 if Bitcoin's at 100,000. Now, I was thinking about this. Now, Bitcoin people are a lot, they're just not that bright if they're doing this, right? I mean, gold people are a lot brighter. Now, if you gold people want to send me your gold and I'll send you a check for half the value of it, and then you pay me 13% on that check I sent you, I'll 2 thumbs up. We'll get a gold bank going. Now, I think Rick Rule is out there. He's already got a gold bank going. Rick Rule has a battle bank, and I think he does. I think it actually gives you a 90% loan to value on that, because gold's real money, right? But Bitcoin, they only go up to 50% because they know what's going to happen. They see the writing on the wall. They see that, and that's going to come tumbling down, and they're not going to be protected on the loan they give you. So they're going to start selling off the Satoshis of your Bitcoin. But it's fascinating, right? I mean, this Bitcoin banking that's catching on, apparently it's doing, because they're getting ready to take this company public. You're going to be one of the lucky ones that can buy stock in this company. And now, instead of buying Michael Saylor's company at 200,000 of Bitcoin, buy this company. You can get the Bitcoin for only 50,000 of Bitcoin. These Bitcoin companies, they crack me up, right? Now, I mean, I know that Sam Bankman-Fried guy. I mean, I know he's sitting in jail for the big Bitcoin Ponzi scheme or whatever, but this would have been right up his alley. I mean, he even had the right name, right? Bankman. I'm a bankman. You know, that would be cool, right? He could have done this. Maybe if they let him out of jail early, he can get involved in this end. But you see, this end, what they're doing is kind of finding ways to fleece the people that have the Bitcoin. Because now there's a lot of people out there, not that bright, but they bought the Bitcoin for $1,000, and now the Bitcoin's 100,000. So they finding a way to get that money from, right? Get that equity from, take that away from. Now, why the person doesn't want to sell Bitcoin, you see how they market this. Go, well, if you sell your Bitcoin, you gotta pay the government half, so you might as well just give half to us, right? I mean, it makes perfect sense. I mean, the Bitcoin bank, they can get wealthy, but this banking stuff, see, banking's really a good business when you do it this way, right? But what happens now? Okay, let's think about this. Okay, so they got your 2 Bitcoin, so we're 200,000. All right, well, what do they do with them? Well, maybe they sell them, right, and take the 200,000, put it into gold, maybe, and then they make some money on the 200,000. When you want your Bitcoin back, you know, maybe Bitcoin's down here at 50,000 and the gold's up here at 10,000. They sell the gold, and you see, there's all kinds of things they can do. All kinds of shenanigans they can pull off, because you no longer have control. It's not your Bitcoin once you give it to them, right? Just like when you put your dollars in the bank, and that's really scary. It's not your dollars once you give it to the bank. The bank can take those dollars, do anything they want with them. They can loan them out. They can go to the casino. They can go up to Vegas, put them on the roulette wheel. I mean, it's scary what they can do. But see, the point is, it's not your dollars anymore. It's not your Bitcoin anymore. It is fascinating, these Bitcoin companies cracking me up, ways to get that money, ways to get that Bitcoin out of people. I mean, even the gold bank, a battle bank, right? Rick Rule, I love Rick Rule. Smart guy, right? He's a big gold guy, but he's got a bank started where you can take your gold and borrow against it instead of selling your gold. Because once again, when you sell your gold, let's say you bought that gold like me at $300. You sell it up here at $3,000, right? That's capital gains tax. Why not just go borrow against it? I think Rick will give you about 90% loan to value. And I think he's going to give you an interest rate a lot lower than 13%. But those Bitcoin people, they're smart, man. They're smart. They know that 50% loan to value is the most they can do, because they'll see that Bitcoin Bitcoin come down. Already dropped 80% over 3 times, right? So if they see it come down 80%, I mean, they're out of business. Their whole business model blew up, and it could blow up in one weekend. So they got a business model. They're trying to take it public, and they don't want it to blow up before they can dump it on the public. Fleece the people out of their Bitcoin, then fleece the public. It's the way to get rich in America. I love this country. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.